Hope you didn't have too much of an eventful journey up from Rotorua.
No, thank you for having me.
Very
And yeah,
good. All right.
Noah passes on his regards. He's worked with another client down south.
Okay, thank you. Excellent. Right. Well, the meeting's yours. You pass it over to you to present your report. Thanks.
Perfect. Thank you. So yeah, we'll jump in, and I guess as you know, this is for quarter two for 2025. We're already now in September, so it is a little bit, it is a few months ago. But I will give you a brief update of kind of what we've seen in the last last few months as well. But for now, yeah, we'll focus on quarter two. If we move to page 1. Top left, just again a reminder of the target, so inflation plus 3.5. Then on the top right, just some observations. So, you may remember quarter one was quite weak. Markets were down, and then Trump had his Liberation Day in early April. That also then caused the markets to fall. But remarkably, then there was a lot of pushback and maybe some reversal of Trump's kind of initial plan. So markets actually by the end of April had recovered and were, had recovered that earlier fall. And then markets actually continued on positive for the rest of the quarter. So yeah, the quarter was a really strong one for equities. And we see that in the performance numbers later on. Fixed interest markets also gave positive returns, not as high as equities, but they contributed positively as well. So that was another good win for the portfolio. So yeah, as a result, the council increased significantly in value for the quarter. And one thing I'd like to highlight is that did end the quarter higher than the inflation adjusted capital, which was a good outcome. And you'll see that down at the very bottom. It is hard, it is narrow, but it is above that inflation adjusted capital. So that is a good win for the portfolio and for the council. Moving to page 2. The top left just shows the portfolio value in numbers. So it ended the quarter just over 104 million. You can see those investment gains for the quarter over 4.2 million. And really for the year, the next column over, really strong investment gains, 7.2 million. Looking down, you've got the asset breakdown. You may remember there was some changes in the asset allocation earlier in the year. And so the portfolio ended the quarter at or near its target. And again, one of the key things we look at is that defensive growth split. It's got the target 60% in growth, 40% in defensive assets, and it was very, very close to that. So that's a good thing for the portfolio. Moving to page 3, got the portfolio returns as percentages. So for the quarter, net return of over 4%, so a really strong quarter. And you can see even for the 1 year, 7.8%, so a really good, 7.7% net return, really strong there. The portfolio was at or about its benchmark for both periods, but really pleasingly that net excess over target, so the bottom row there, almost 3% above for the quarter and almost 2% for the year. So a really strong performance over that target. Looking down at the attribution analysis, just a couple of kind of quick comments there. The portfolio did begin the quarter slightly underweight equities, and as they rallied, that had that was a good place to be in equities, but it was slightly underweight to begin the quarter. So it had a slight drag from an asset allocation perspective, but you do see that really strong security selection from the active managers. So that did play off and kind of counterbalance that asset allocation impact. Page 4, brief summary of the asset class returns. Again, I won't go through all the numbers, but a few just to highlight. Top line's global equities. As you expect, equities did really well, almost 8% for the quarter, right on its benchmark. Emerging markets also did reasonably well. Didn't quite keep up with its benchmark, but almost up, 3.7%, which is maybe on the face of it slightly surprising given the tariff uncertainty. But emerging markets actually held their own, which is really positive. You can also see then cash, global bonds, and real assets, not the standout performer for the portfolio, but positive returns nonetheless, which added to the overall return. A few things that also changed. So earlier in the year, the Fisher Fund's property fund was sold out, and infrastructure manager First Tier changed their strategy as we discussed last meeting, and those assets were in the real asset class there in the middle. Moving to page 5, at a manager level. Again, without going through all the numbers, A couple just to highlight to you, the Vanguard hedged is the second line and unhedged is the first row. You can see quite a different performance between the unhedged and the hedged, and that's really just because of that US dollar depreciating and weakening over the quarter. So, the hedged was up 10%, the unhedged only 5%. What we would see though over a year, and we don't have it in here, but over the longer period, so the year, the unhedged has done better than the hedged. But just for this quarter in particular, given the currency movement, certainly being in a hedged fund paid off. And again, in your portfolio, it's a 50-50 split. Both those, the Vanguard they track the index. And so again, that's why the excess return over benchmarks pretty well. Nothing, it tracks that index really closely. First Sentier otherwise did have a good performance. So that bottom row there, they did really well over their benchmark, and they've changed their strategy recently. Page 6. The key kind of thing just to highlight here, Colchester had another really positive quarter. So the government bond fund, there's a few points there down the bottom just around some of the overweight positions. But again, they were also underweight the US dollar. And so that was a positive performing as that weakened over the period. So yeah, that was it from that report. I guess a couple of comments kind of moving forward. So again, this was up to the end of June. We're already now beginning of September. We've only got one more month of this quarter and then we'll be back again. But markets have continued higher since June. So although we don't have the exact numbers for the council, we would certainly expect them to have been higher than what it ended up at the end of June. An example of that, I guess, is the S&P 500, so the big US index for the top 500 companies. That was up over 4% for the July-August period. So again, a really strong performer there. So yeah, certainly we would expect the market to, also the portfolio to continue higher since this report. But again, we've got one more month to go in the quarter. Who knows what might happen, given all the uncertainty, but it is, positive momentum in the market is still there despite everything.
Thank you very much for that work. And yes, it's very encouraging to see the changes that were made to our SIPO and the positive impact that that's having on the returns. Doesn't seem a lot at this stage, but by the time you compound it out over 10 years, it makes a significant. So, yeah. I've just got a couple of questions. And the first one, not wanting to delve into how you manage these things, but do you look at individual fund managers and the contents of their portfolios to have a feel for how they're thinking and how they're performing going ahead? I know when we had the original presentation, there was quite a lot of due diligence done on the individual fund managers and concerns raised when there was some changes in personnel there. Can you just explain how your ongoing management of that process, the diligence of the fund managers carried out by Macquarie?
Sure. So you're right. We've got quite a stringent kind of process for the fund managers themselves. So that due diligence process, and I guess that comes. We've got things we look at: skill, operations, process, team. So there's a whole lot of kind of categories that we look for. We don't often drill down at the underlying companies because that's kind of for the fund managers themselves to look through. Yep. What we do though look for, if for example it's a value fund or a growth fund, we do look for those factor exposures. We do kind of keep an eye on the exposures for the fund, but not necessarily whether they're buying A or selling B. That's for them to look at. I guess an example was some of the changes around First Sentier and we brought that to you, did a memo on that, discussed that. So certainly there are changes. It seems recently infrastructure's had a lot of changes in some of their funds or some of their fund managers. So yeah, that's certainly one that we are keeping an eye on. But it's probably not at the individual holding level. It's more at kind of the team, the process. And you're right, whether there's key personnel changes and what that may mean for the fund going forward.
Thanks for that. Yeah. That gives me comfort that that part of the business is being well managed. So that's great. Does anybody else have any questions for Lou? All I can say is thank you very much. Excellent performance, and pass my thanks on to the powers that be at the top of Macau. I know they don't have a lot of influence over, but certainly the results to date have been very encouraging. So yeah, it's great. Thank you.
Oh, thank you for having me. Appreciate it.
Thanks, Luke.
Pleasure. I'll
Thanks.
let you drive back to Rotorua now.
Thanks.
And there is the capacity to come online if you want to. Like that's entirely up to you. We're not going to tell you not to turn up to meetings. And this is our last meeting of the triennium, so the next meeting may have a different view on life. So
Yeah, no, it's nice. It's nice to come and weather was good. It was nice to come out, get out of the office and come and meet you guys again. So
excellent.
no, I appreciate the face to face.
Well, you're very welcome to be here anyway. Anyways, thank you. Making the effort.
Thanks, Luke.
So we have a resolution. Thank you, Mikhail. Stu, seconded. Thank you. All in favour? Against? Carried. Here we are. We've approved it for you. Okay, so we now move on to amendment to the debenture trust deed. Now, Janine will lead us through this, no doubt.
Yes, thank you, Mr. Chair. So this is an opportunity, I guess, to make some changes to the debenture trust deed, which is the mechanism by which our borrowing is secured by way of a charge over rates. The LGFA has worked to agree some amendments to the pro forma debenture trust deed that, if council was to adopt, would effectively mean that we issue a global stock security, which would simplify the borrowing process and provide some cost savings. So rather than every time we undertake a borrowing needing to do an issuance of security stock, we would actually just have a blanket provision there. So the information is provided there for the committee, but seeking your authorisation, I guess, for staff to proceed with this, noting that it is a change in the security that is offered by council. Again, I've discussed this in principle with PwC as our Treasury advisors. They certainly don't have any concerns or issues around this. And as noted in the report, definitely an efficiency mechanism, and ultimately there would be cost savings associated with it as well. So yeah, therefore direction of the committee.
Thank you for that, Janine. And if I can just add my tuppence worth, this is the normal commercial way of raising funds for commercial organisations, and I'm pleased to see that local government New Zealand has chosen to come into the real world and doing things in a more efficient manner than historically done. So,
yep.
So it really is just an easier mechanism to provide security to our lenders. So I'm very happy to move this amendment to the debenture trust deed.
Right.
Anybody got any questions? Sorry, Stu.
Yeah, I think I'm happy to second it. My only question was, I was a bit surprised. Are those legal costs pretty standard? It seems a lot of dough, but
You try to talk to a lawyer and see what's
Yeah, in
no, I know
terms
that,
of
but it still seems, and it's per
per tranche of borrowing.
tranche, eh?
There is a lot of backwards and forwards in terms of paperwork associated every
Right.
time we undertake borrowing,
Okay.
and our solicitors are key in that process. So actually, I would say that $1,300 is probably really good value for
Okay.
the process support that they provide us. Hopefully there would be a little bit less of that, certainly through not having to do the stock certificates every time. So
Now, well, on the back of that assurance, I'm happy to second, but
Yeah.
that's thought of. But
Whatever you do with the debenture trust deeds, generally they get audited every year, and I'm not sure
Yep,
whether
they do.
government auditors do that, so there's a
Audit-
cost.
Audit New Zealand audit the debenture trust deed, every year.
So it's subject to an
level.
external review each, whereas the notes that we were issuing previously are a far more complicated process to deal with. So there is extra cost. I just think it's absolutely the right thing to be doing. I'm pleased that local government New Zealand are going down that path. No more questions? I've moved it. Stuart seconded. All in favour? Against? Carried. Janine, does this have to come back to council? Or Notification or just notification?
So I think the decisions in terms of the amendments to the trust deed would go through council. So my hope is that, as is noted there, we can get legal support to run this with us, and LGFA will make a contribution to that. So with committee approval, I will kick that into action
Good.
with the intention of having this signed off by at the September council meeting.
Okay,
Yeah.
thanks. That's good. Yeah, because as far as I'm concerned, the sooner we can start saving
Yeah.
money on it, the better.
Yeah.
It's just. Right, thank you. Okay, so the next item on the agenda is the rates information to the 30th of June. Ms. Linda, do you want?
No, that will be me presenting.
Janine's going to lead us. Thank you.
Thank you, Mr. Chair. So just the regular reporting in terms of our rates collection performance. Actually really pleasing to note a slight, maintaining and a slight improvement on that current year collection for this financial year. So 97% of current rates collected versus 96% last year, which also means obviously that the arrears are slightly lower as well. We've provided a summary there in terms of the value of remissions that have been granted in this financial year. And you can see the uplift compared to last year. So 559,000 last year, up to 736,000 this year, which has exceeded the annual plan budget. The key shift there is around the value of the hardship remissions that have been granted. And obviously through the LTP, there was also a change in the value of that remission as well. So that's probably made it more worthwhile for people to apply, but we've also simplified the process in terms of closer linkage with the territorial authorities around their DIA rebate process. So just noting that the remissions for the year exceeded the budget. We had anticipated that when we were doing the annual plan and had made some additional provision with new financial year for that. So we'd expect probably going to see that trend in hardship remissions increasing, plus I guess remissions as a proportion of total rates revenue as well. But yeah, happy to take any questions.
I'd just like to say thank you to Janine, and it's extremely encouraging for me in the difficult economic circumstances that we're in at the present time. And we heard it from a couple of gentlemen on the chamber yesterday, that the trend of collections is far higher, is excellent, and that I see that's following through debtors as well.
Yes.
Have you had a change in personnel? Is there a different methodology? Systems methodology? Or?
In terms of the rates team, no, but I think the team have also been coming through that post-in-for change process and sort of coming to grips with the way that the system now works compared to what they were used to. So being able to get back to some of that more deliberate follow-up action, not hard collection, but just actually customer contact. From a general debt perspective, yes, we have had some changes in that space. We can talk about that in the to that report. But again, really good to see the progress in that space as well.
It's a credit to the teams to be able to report that in a difficult. So, Kale.
Yeah, just to endorse what you've said, Chairman, but also the remissions, Janine, because that was a big thing that I asked through the annual plan, long-term plan, is visibility of that to be out to the ratepayers. Do you think the increase is just because the hardship out there has been a lot harder, or have you done something or the staff done something to make it more visible so these people can apply for it?
So through the chair, we are working more closely with the territorial authorities and understanding those ratepayers who are eligible for the DIA rebate, because effectively that's the eligibility criteria for ours. And so sort of trying to join up, and obviously there's some privacy stuff there, but working that those TAs can be promoting it for us as well. So where they're talking to people about DIA rebates, they can also talk about our hardship remission. So capture it at that point.
Awesome. Thank you.
What about the ones that are declined? So that have been reduced. So there was one that's gone from 30,000 to 25. That rate
Via
PT
PT indirect.
directly, and then there's one public transport directly that's gone from 140,000 to. Were they just in the wrong criteria, or what's happened? Like, what was the reason for the reduction there?
So through the chair, the PT indirect and direct have reduced. But that's probably because an extension of the network actually, and probably things like fixed service. So eligibility under those remission policies was around access to services. So if we've got less properties that are actually, or more properties that are able to access the service, then they will be paying the rate. So I think it's acknowledgement to the transport team in terms of the way that the services are actually reaching some extended areas within Hamilton City.
Yeah, well, getting close to 11. I think we're okay. 2 is the minimum, and we'll have 3 things. Probably you.
No, that's fine.
Thanks. All right. No other questions. Somebody want to move? Thanks, Mikhail. Yeah. End up.
No, just in terms of.
Okay, yeah, we have got another one. So, Robbie, thanks for seconding it. All in favour? Aye. Hence carried. Okay, next item on the agenda is the public transport rates remission. Criterion. Janina's going to explain this little number to us. Thank you.
Explain this little issue. Thank you, Mr. Chair. So councillors may remember that through the 25-26 annual plan, as we did the shift to regional rating for public transport services, staff had also provided some criteria for a revised PT remission policy, noting that because we hadn't consulted on that as part of the rating proposal, they were criteria that we would apply under our general remission policy. As we have set and assessed the rates for 25-26 and then looked at the impact of applying those criteria, it's become abundantly clear that the value of the remission that would result from those criteria is significantly higher than the value of remissions that we have been granting to date. So a difference between, 150,000 versus $2 million. And so that has clearly caused us to take a look at what we're trying to achieve through the remission. And whether we should be continuing on that basis or not. It's the staff recommendation that for 25-26 we do not apply a remission in terms of the public transport rate, but instead we do some work in terms of are there other matters or criteria that we need to be considering to develop a revised remission policy that we could then consult on as part of the 26-27 annual plan. If council was uncomfortable with that and wished to continue with the policy or the criteria as had been previously approved, that would result in about a $1.9 million budget deficit for us, which would mean that we would need to go away and find savings across the organisation to address that, which would obviously be a significant undertaking. So To inform your consideration, I've tried to do a little bit of sensitivity analysis in terms of what we're facing under the current criteria. And then, you know, what if we increase the value? What if we decrease the value of the proportion of the rate that was provided in terms of the remission? Any way that we do that, there is an additional cost impact to council. And I think there's some fundamental questions that we actually need to ask in terms of why would we be applying that remission, where for a number of these properties, they're probably the ones that are actually getting the greatest benefit from the availability of public transport services. This is only a Hamilton City issue. It's not an issue around the regional rating, because it is linked to the capital value rating within Hamilton City. So happy to take any questions from Marty.
Okay, Angela, would you like to ask some questions of Janine on this?
Yeah, thank you, Chair. Can you hear me okay? Can you hear me okay? Okay. Yeah, obviously not ideal that we're in this position, but happy that staff will go away and do some work around this, and that we can come to a workable solution around what we need to do moving forward. So happy to move this motion with what we can see on the screen. Thank you, Chair.
Thanks, Angela. Thanks, Stu. Questions, Robbie? Okay. If there's no further questions, I'll put the resolution to the meeting. In favour? Right, against? Carried. Doesn't affect either of you, so. Okay, thank you. So the next item on the agenda is 7.1 is Councillor, Client, Executive and Director expenses. Paper's been circulated. Janine, do you want to run us through it? It's
Happy for the report to be taken as read. This is just one of those disclosures, transparency mechanisms that we provide for the committee.
Thank you. If there's no any questions, if not, I'll put the resolution. It's Robbie to move it. I'll second it. All in favour? Aye. Against? Carried. Thank you.
Excuse me, Chair, sorry.
Sorry, did you have a question, Angela?
No, I just note that in the paper it says that elected members will be provided with the information before the meeting. However, I haven't been provided with the data before it's released publicly. I'm just wondering if either that can be removed from the papers in future, or it can be circulated to elected members prior to the meeting.
Thank you. I will note that.
Thank you.
Okay, so we move on now to the Tenders Board awarded contracts.
Thank you, Mr. Chair. So again, information is provided for transparency in terms of all of those contracts or amendments to contracts that have been approved by the Tenders Board. So those being with a value over $250,000. Obviously, there's a further escalation path for the higher value and multi-year contracts that would come through this committee. Happy to take any questions on any of those items.
I've got a couple of questions. I noticed we had a NIWA contract renewal for about 1.1 million, which might have been about earlier this year, for testing of waters on Lake Taupo. I see we've got another contract for them. Do you know the extent of how many contracts we've actually got? Work on testing the waters of Taupo? Is this an extension of that contract, or if so, why is the other part of it not included?
Through the chair, so as noted there, it's an extension of the duration of the contract. So this will take us for the next 2 years.
27.
Yeah.
So do we know what the total contract value is? Because the previous one was 1.1.
So in terms of this contract, it's the total value for that is $685,000.
So what I'm trying to get my head around is how much is the total contract? Because 1.1 million was only approved a short time ago at this committee, tabled at the committee.
Been tabled at the committee.
That's
See if I
my
can find it. It
memory's
might have been
failing
on
me.
no, I'm not saying that at all. I'll just have a look during agenda here. On a different contract. Can't read it.
Chair. Yeah, maybe it's something which you can come
Okay.
back on, Janine,
Yep,
if you want
happy
to.
to do that.
Um,
Just can't quite lay my
And the
hands
other
on it.
question I'd like to have a discussion about, and it's pity there's not more people in the room,
Yes.
is, sorry? Oh, Warren, so you've got a question? Councillor
Yeah,
Marr?
yeah. Hi, Chris. Thanks for that. And thanks for the ability to take part in your finance committee. A couple of questions really. A number of these contracts that are showing variations, etc., they have no terms beside them, as in timeframes. Some do, some don't. And also note that a number of them have already kicked off on the 1st of July. So just interested in what ability we have to question any of this.
So through the chair, in relation to the last question, this is staff acting within their delegated authority. So remembering that council delegates to the chief executive, and then the chief executive delegates to staff. And in this case, for these higher value contracts, that delegation or authority is held by the tenders board. So the decisions for a number of those may, in order to actually have contracts in place for the 1st of July. So it's just, that's the mechanism in terms of the procurement process. For the very high value and for the multi-year, those are the ones that we present to this committee for a decision. In terms of the question around extensions, generally they are noted in terms of that time frame and the shift from the current contract value, what's added to give a revised contract value. Is there a specific one there, Councillor Marr, that you're concerned about or interested in?
Oh, there seems to be a number, Janine, that seem to run now from basically July through till December, and just wondering why they weren't picked up. They don't seem to have been sort of raised in the annual plan discussions or anything like that. So just interested in why we're looking now from July to December to extend something. And then, for example, the embedding enterprise work management, there's a contract value there of 400,000. There's no type whether that's a 6-month contract, a 12-month contract, a 24-month contract. There's no term listed alongside it, and just interested in what that one actually is as well.
Yep. So in terms of these, part of the criteria for the decisions is that we do have funding provided through an annual plan. So they can't be decisions that are inconsistent with an annual plan. There are some that extend obviously beyond that period. I guess under any contract, we have a right of cancellation if that was something that we needed to consider at a future date, but we just need to work through a process on that. In terms of the embedding enterprise work management, so I think you'll be familiar through the Chief Executive Employment and Remuneration Committee discussions that the Chief Executive will have had around, I think he's referenced it with you, around enhanced portfolio management. That is the contract that we have in place to actually support the organisation through that implementation, delivery, change process. So this is trying to get that breakdown get good visibility over our projects and programs, but also understand what's being delivered within our business as usual budgets and what their drivers are around legislation, how they align with council strategy, all of that analysis that will help support investment decisions moving forward, or divestment decisions as well.
Is there a change management piece in that one as well, Janine?
Yes, there is. Yeah.
Okay. Yeah.
Yeah.
Okay.
So the rollout of that's about to start with some staff training over the next couple of months.
Okay. Yeah, no, that's probably it from me. Thank you, Chair.
Thanks, Warren. Bobby.
Yeah, if you're looking through some of these numbers, the issue, if you're an outsider looking into it, it looks like it's our contingent. Trying to think of the right word. I can't spit it out now. Pardon?
We've taken the word
We're taking
contingency
that
out.
out.
But it sounds like, because it all looks like it's 20 to 30% on top of the original price. If you were just looking roughly,
yeah,
if you're
so-
looking, that's where it feels like those numbers all come out of it. So you know where I'm going, eh? It doesn't look good in that perspective, is what I'm saying.
So can I give an assurance to the committee that this is not around an inflated contract value to provide contingency? I think, as had been previously requested by the committee, we actually used to report the separate contingency value, and we've removed that from this thing. So this is either extension of time
Yeah.
or additional cost based on the program of work.
Yeah.
Some of that might be funded through a release of contingency that's available. This is the contract value, but it's not an extension to try and add contingency.
I'm not saying that at all, but it looks in the manner that it's just about 25 or 30% on top of each contract. That's the way it looks. It's the perception of how those numbers have turned up like that. That's all I'm saying.
Assurance that it's not.
I understand, but you
Yeah,
look
right.
at it and that's exactly how it looks.
Yeah, fair enough. Janine, just a discussion I'd like to have and see whether it's useful or not. Have we got a register of all tenders for contracts that have been?
So through the chair, we have a contract management system, which is operational in the organisation. And that is a shift from the previous contract register that we have held. So it is actually around the management process of contracts. It's one of those areas that we're in the process of running out training to staff in terms of roles and responsibilities for that contract management, and then how that translates into their utilisation of, to give us some of those really valuable insights that we need around how our contracts are running, where they're at, how contractors are gold.
So can I ask how much work would be involved to prepare a schedule, all contracts that we have entered into? 2 sections. First one being that approved in accordance with the tenders. The second one being that has been approved without being subject to the tenders board.
Yes, so through the chair, to be clear, everything approved by the tenders board is reported. So it would be a reporting of anything that's here. Anything else is approved under those staff delegations.
That would be what I was seeking as a separate report. In other words, because we have no clarity over that at the moment. These are tenders boarded.
Yes, they are.
So what I'm asking is, are there other contracts which are approved under delegated authority that we?
Yes, absolutely, because that's the delegation of authority from council to the chief executive to staff.
So my question is, how difficult would it be for that schedule to be prepared and tabled? Councillors to give us visibility over what.
We can absolutely do that. I guess my question would be down to what level? Because there's,
Therein lies the discussion. I would like to see starting at maybe 250k because that's where our
Oh,
text will,
yep.
maybe,
that's
maybe we
yep.
go below that. I don't know. Stu,
Well,
you've
it
got-
would be below that because if it's 250 or more, effectively director delegation is 250,000. So tenders board is it. Tend to play a little bit conservative around the very close to those margins, just for full transparency and to get that oversight through.
So would these be specific tender agreements? And where I'm going, I imagine there are some services we procure that
Don't go
could be over
through.
a number of tenders and collectively they add up to quite a bit.
Yeah.
But
that-
individually, they don't meet the threshold. But I mean, are you looking to say, how much do we spend on stationery, for example? How much do we spend, you know what I mean?
Not looking for external appointments that are costing over an X amount of dollars. And it's a question of, like, this is 250,000 for everything goes to the tenders. There's a level between, and I'm asking what the bottom level should be. Is
Yeah.
it $100,000?
And so where I'm going is, why do we want the information? Because with some of the stuff, what are we going to get here that we don't get from reading the annual plan or approving the annual plan in the long term?
And the financial performance monitoring report,
Yeah.
which gives you on.
Because unless we're going to dig into the detail of, I don't know, what's a freaking hourly rate for the bloody media works fella or whatever it is, I've got no idea whether it's value for money or not. And if we're not going to go into that detail, then I don't know that I really want it.
What you don't know is what you don't know. And that's really why I'm asking the question. I would want to know what's in there. It could be a significant, maybe insignificant, which
Yeah.
means you wouldn't worry about it. But unless you know what level of expenditure you're talking about, you've got no visibility over it, no ability to be able to ask questions.
You know, I get all that. I just don't want to create extra admin for Janine's team if it's not going to provide us with information that we're going to do anything with. Because just looking at it is not kind of doing much with
So,
it.
yeah, so through the chair, we can provide that information. But I would be keen to understand what insights you want from that, rather than, otherwise it's probably a spreadsheet of contracts, with maybe something around the appointment process. So has it been through a competitive RFP?
Yeah, that's basically the
but-
information that we.
Yeah, so how that's actually going to support you in your governance and insights.
Yep.
So we can do it. I just want to make sure that we're not providing you with just a whole heap of data, that there is some
No
sort of
use.
analysis and insight to
Yeah,
it.
look, totally agree, but my view is that we don't know what we don't know. That's it. But I'm not suggesting we do it now because there's no point. I'd like to put it on matter horizon to be discussed at a future. New committee can sit and see the benefits and issue to be discussed.
Be good practice with a new finance committee next term this is the current practice of reporting, this is what you want or what you want. That could be that process.
Yeah,
So-
and through the chair, I mean, I am aware, again, through, proposed, bills in terms of changing legislation around additional disclosure and transparency in this space. So that's something that I am really, we're not hiding anything.
No,
but
nobody's
it's
suggesting urgently.
no, but it's what's going to be useful
Yeah.
for you.
The reason I'm asking the question, I've been asked about delegated transparency we got happening in delegated authority. I can't answer the question. So, and maybe it's of no concern to anybody else. So that's what, putting it on.
So I think, in terms of that, what you get to see is financial performance reporting that says how we're going, and where that expenditure is happening against budget. And I guess all of that is subject to an audit process.
Yep.
You've got some mechanisms, but if there's other aspects from a transparency perspective that we can address. Happy to do that.
Thank you. Robbie?
Yeah, Andy Foster made that quite clear yesterday too.
Yes. Yeah.
Pretty relevant to what you're talking about.
There are
Where central government's direction's going to go.
yeah, there are changes coming down the pipe.
There are
Maybe I'm just
changes
getting
in
ahead of
bills.
myself.
Yeah.
Yep, and very, very aware of that. And I think I referenced it when we were talking about financial performance monitoring around that contract versus consultant spend. We need to be really crisp and clear on that.
Yep.
Because even though we've reported 1.3 million of consultancy spend, some of the descriptions that I've seen coming through, I don't believe that's actually consultants. I think contracted services. So we need to be really straight on that definition and reporting if it's going to be reported in the transparent way that's
Understand that, and I
Yep.
did ask for a definition.
yes, yeah, I know. Yep.
Probably wasn't the definition I asked when you originally prepared that schedule, which is probably what's caused the conflict. But that issue.
Yeah, we can have a chat about that after the meeting.
Okay, thank you. All right, so now we need to move into, tenders board award contracts. You,
Public excluded. Yep,
Almost.
sorry.
I'll second that. All in favour?
Aye.
Carried. So, public excluded resolution. It's moved. I'll
Sue
second it.
moved it.
Let us know when you're ready.